But Brian, do you agree with that premise that maybe the worst of the tightening has already been priced in and now we're starting to go the other way?
I like what I'm hearing from her, yeah, and I do generally agree. I think that the market responded fairly favorably to Chair Powell, kind of suggesting and maybe hinting a little bit that if the growth picture does deteriorate a little bit too quickly, even if we don't get a material improvement in the inflation outlook, that they could pause, not necessarily saying that they're going to cut rates in the face of weaker growth, but that they're going to just be singularly focused on inflation. And then the day's University of Michigan data saying that we only had that 0.1 percentage point increase in long-term inflation expectations instead of that kind of eye-popping 0.3 percentage points. That also, I think, has kind of helped fuel things here, saying that maybe the Fed doesn't have to go as quickly. And as a result, maybe a lot of the multiple compression that we've seen is mostly behind us. Now it's really up to earnings to prove that these valuations are worth it.
Right. And we are going to get into earnings season. We had FedEx, which was decent. And it's actually one of the biggest winners in the S&P. We've got Nike on Monday, and then we'll get the banks. Joanne, where are the best places for you right now, keeping in mind we are going into earnings season?
Right. I think if you look at the market as a whole, the PE for the S&P 500 looking forward is around 16 times, which is about at its historical average. And there's, though, a wide variety, a lot of dispersion there. We should expect there to be different takes on earnings. Some companies are going to face more headwinds from inflation as some segments of the consumer population have to cut back. But it's really a tale of two consumers. The wealthier set, even mid-income and higher, probably aren't changing their consumption patterns very much. So earnings for something like a Williams-Sonoma probably does just fine. You go into industrials, GXO Logistics, we really like here. It's actually performing very well, providing more efficient warehousing and logistics handling for companies. Even if a recession comes along, we expect companies to try for more efficiency. So, earnings, I think, are going to be a really mixed bag, depending on how well companies can pass through price increases. Because inflation, we're not done with it yet, and we should be prepared for some surprises and potentially negative surprises. So we see more volatility ahead in terms of positioning. We think you need to be a little bit defensive, build in some protection against higher inflation, but also make sure to own good companies that have become extraordinarily cheap after this runoff over the last several months.